Hello everyone, happy Sunday. Let's do it. All right, good to go. Should be able to see dollar. Alrighty, everything is good. Good to go. Should be able to see dollar. All right, let's turn that guy down. Rudely interrupting. All right, guys, let's go ahead and get into it. So it is the third week of March here. Finally, we have price action loosening up on indices, dollar, bonds, all the above. And obviously, that is just great for us as traders. So now going forward, now is the time not to be bullshitting around. There is generational wealth making opportunities, not in one trade, not you're going to over leverage one trade and make generational wealth, but with the opportunities we're going to see in the market, you can build generational wealth with the opportunities and the swings we're going to see this year. Now's the time to lock in. Let's get into it. So what I'm going to go ahead and share is my top-down analysis, what I'm looking for across all markets, and we're going to start top-down. Very, very important for you guys to understand. A lot of you guys have just started trading in the last 2-3 years, and you've never seen market conditions where bonds are moving, dollars moving, indices are moving, and you have to understand that, right? Because like you'll see here for the past few years, dollars just been sideways. Bonds have been sideways. When bonds and dollar are trending, you have to be aware of what those asset classes are doing, regardless of what you're trading, regardless of whether you're trading foreign currency, right? Because imagine trying to go long euro and pound last week, right? Just to rip your face off. Or if you're a bond trader, right? Imagine trying to go long bonds last week, right? Completely head removed. So you have to understand, regardless of the asset class you're trading, what intermarket analysis is doing. So I'm going to go ahead and touch on this here. This is the last time I'm going to address this year, but I do want you guys to understand what we're doing here, why we're looking at certain things, and how this is going to give you visibility like nobody is able to give you. And the reason I say that is because there's funds, there's banks, there's institutions on Sunday now that are losing sleep over what these markets are going to do. Where's the dollar going? Where's euro going? Where's bonds going? Where's the S&P going? And they have no fucking clue. And we are here sorting this out casually on YouTube. So it's exciting, a lot more opportunities coming into the market, but you need to understand what we're doing here, right? We're not just looking at candles and drawing lines on our chart and for the sake of doing it. These are targets. This gives us risk on, risk off, right? So I'm going to cover the basics here first before I get into it, so you guys understand why we're doing it. For the newer folks, you guys can have a full picture of what it is we're doing here, what you should be doing. So first things first, we're going to start with the dollar. The dollar is the linchpin of the entire market. The bond market drives the dollar, drives the currency. So we look at the dollar, we confirm it with the bond market. Then before we even go into whatever asset class, whether you're trading commodities, foreign currency, stocks, it doesn't matter. Once you have an idea of what the dollar and what the bonds are doing, now you have a good idea of risk on, risk off. Now you already have a bias going into those markets, right? Who went long stocks? None of us this week. Why? Because it's indicated it was going lower. Easy. So you have to understand intermarket analysis. It hasn't been, and for mentorship, those guys that work with me directly, it hasn't been as much of a factor for the past couple of years because the bonds and the dollars, it's been consolidated. It hasn't been doing anything. So the information hasn't been useful from those markets for a macro perspective. Now, these markets are ripping and roaring. So you absolutely have to understand where these markets are going, because you're going to have no clue why certain markets are moving, why we're going to see violent moves lower. Look at the Dow last week, dumped. And if you understand what these other markets are going to do, it was easy to predict. So I want you guys to understand what we're doing here, why we're doing it, and what I'm about to go into here is my top-down analysis. So now that you understand the inter-market analysis, why we look at different markets, well, how do we look at each market? We look at each market through top-down analysis, meaning you start from the higher time frame and you work your way down. So I'm about to go through that here with you guys. We're going to start from the monthly, and I'm going to work you guys down to the hourly chart. As we go through the time frames, you're going to see refinement. It's very important you don't get lost in the sauce. I'm going to talk about a lot of things on intraday time frames and lower time, or not intraday, but lower time frames on a monthly and weekly. But you have to understand how all the time frames converge. So when I refine down and I go through the time frames, don't forget and get lost in the sauce, as they say, in what I'm teaching on that time frame, and you forget the overall context of what's already been talked about. Okay, so very important. That's what we're going into here today. Intermarket analysis. But then each market is broken down top down, so you understand what each market is likely to do. All right, let's go and get into it. So we'll start with the monthly chart here for US dollar. So dollar's been in a nasty range here for months, and then we finally dropped down. We took out the sell side here. What I was measuring, what I wanted to see when we were taking out this low, is does the market give acceleration to the downside? Jeff, happy Sunday to you, brother. Joe, what's going on, man? Good to have you. All great. Clear, Dylan? Awesome. Hey, Raj. Glad to join you. Glad to have you, brother. All right, guys, let's get down to the business here. Let me open that back up here. All right, there we go. So monthly chart, we're watching how we traded below the swing low here. We failed to see an acceleration down through it, and then we pulled back into the range. Last month, and again, these are all details. These are all details that give you narrative. It gives you magnitude, meaning a lot of traders have no idea why we're seeing a big range here. If you understand price action, you understand that after a small range, it'll be preceded, a large range is preceded by a small range. So a small range goes into a large range. So keep in mind, as we refine down, again, what we're talking about on the higher time frames as we refine, it's going to be very important to the overall narrative. And then when I'm on the daily chart, it's going to make sense. Oh, that's why that fair value gap is important. Because what happens to many of you guys is you're looking at fair value gaps on the 1 minute chart, but you're not really clear as to where that 15-minute or that hourly chart's even going, right? It's the same concept here. You have to understand higher time frame. Then as you work your way down, it becomes very simple and easy to understand what you're looking for. So monthly chart, we dug into the low here, failed to accelerate. We threw down a wick. We stayed in the upper half of that wick. At the same time, we saw an inside bar here. An inside bar is a candle that does not breach the previous candle's high or low. When you see that next candle, you're immediately thinking speed, you're thinking magnitude. That doesn't give you direction, but it gives you velocity, speed, magnitude in the direction of the drawn liquidity. So we see a small range followed by a large range. Now you're going to see as we refine down into the time frame, it's like, whoa, where'd that big move come from? And it's not a surprise to us, right? So we stayed in the upper half of that wick after taking sell side. This is the key wick here. This is a turtle soup level. And then we stayed in the upper half. And we created a small range going into a large range, which now attacked this monthly swing high here. The reason that monthly swing high is key is because there's going to be a lot of stops here, right? A lot of traders want to be short this market. So their buy stops are going to be what above the most recent high before the sell-off. So the market was in a hurry to reprice to the liquidity there. All the market's doing. So liquidity engaged on a big range candle. So what I'm looking at, and also what I'm sharing here with you guys, is context from the previous week, the previous month, what we saw the previous week, and then how that segues into what we're going to see this coming week. But if you understand what these markets are going to do, have a great deal of precision, you have to be willing to obviously take the information that's available. So swing high here on the monthly chart, we're accelerating through that. I like this fair value gap here as the next draw if we continue to accelerate above this high here. Then how we trade inside this gap obviously will be very key for me going forward. Do we stay in the lower half, start to roll over, or do we completely just rip through it and then make a run for this gap here and then potentially this high back here? So that'll all depend on what we see on the geopolitical front. However, we're not getting distracted by the headlines and the noise, which is changing day to day, right? War's over, war's on, war's over. We're going to do it just for fun now. Nonsense, right? Imagine there's actually traders that are trying to make investment decisions based off news headlines. And that's their fundamental edge. Total bullshit, right? We're cutting right through that and we're getting right into what's this market going to reach for. So we're not worried about any of the headlines, right? It almost comes like you show me the market, I'll tell you the news, right? And we saw the dollar rip this last month over the last 3 weeks. Oh, well, nobody could have predicted that because that's the word. That's why the market's traded higher. Well, this YouTube channel must be called Nobody. So nice repricing higher, fair value gap. There's the next draw. Looking at the weekly chart here, the other level now refining down to the time frames that we're watching is this weekly imbalance here, right? So we saw in the previous week, we closed above that, right? That's very key because now once we close above that, this now becomes what? Inversion fair value gap. So if you guys recall earlier in the year, we were discussing that level in particular. I'll cover that measuring gap for you guys in a moment. Let's go back to the weekly chart here. So we were talking specifically about this fair value gap here and wanted to see how the market used it, right? I was still trying to get direction. It's early in the year, right? We're just now going into the middle portion of the March months, going into Q2. So still very early in the year. So I'm still trying to ascertain what's the direction going to be for the first part of the year. This weekly fair value gap was instrumental in that. What I wanted to see is, did we respect it, really start to roll over? Or do we stay in the upper half of this wick, which we did? We then traversed to the high end of this fair value gap, and then we laid a body closure over top of that. When this candle opens, we're now expecting this to act as an inversion fair value gap. So it'll be like a launch pad that take price higher into what the liquidity that we were looking for here last week. See that? So closure above tipped its hand to those that are in the mill, and then they're looking for higher prices to buy side here. You also notice this wick here stayed in the upper half, just beautiful. And I'll share one more thing here with you guys on the inversion fair value gap here. Looking at the 8s, very interesting. You'll see how we dug into the inversion fair value gap. But like I told you guys, right, we've talked about this before. I'm not going to look at a range on my chart that's 1,500 pips and say, all right, this is the inversion fair value gap, this is my key level. That doesn't mean shit, right? It doesn't mean absolutely anything. You need specific price levels within a gap, because if you just have big ass rectangles on your chart without specific price levels within it, what are you doing, right? What are you doing with this big block? There's nothing actionable with it. But now when you put key measurements on it, like, ooh, that's an interesting low of the week there. When we're bullish, when we want to see the upper quadrants or 8s support price. Inversion fair value gap, buy side. Working down into the daily chart here, I'm going to take off this weekly gap here. So what you're going to see here before I zoom into the actual details, you're going to see this is a market maker buy model here. We have the yearly open here. That's what this vertical line has been on my chart here the entire year. And this is the yearly opening price. So we drop down below the yearly open. We've taken the sell stops here. From here, we ripped higher. And then we drop down into this fair value gap here. I wanted to see if that fair value gap would lend support, and that would give us a bias, right? It did. Body stayed right at the midpoint. And then it got above the inversion fair value gap that we were watching here. And then we said as long as it stayed in the upper half, that would take us into these inefficiencies here. It did. Rockets higher, creates a new gap. This is a measuring gap. Why is that? Well, if this is what we were saying is the draw, right? This high here, it's relatively equal to this one. And we have the range here that's starting here, right? Let's make that dealing range. That's good. And we'll thicken that up a little bit. All right. So this is where the run's beginning down here, right? This is where we think it's going to get to. Your measuring gaps form at 50% of the implied run. So we're expecting it to draw into this liquidity here. If this is the beginning of the run, the turtle soup, at the halfway point, that's your measuring gap. And then you see it drops down into it. You don't want to see this gap fill all the way. So it trades down into it. It offers an entry in the upper half. And then you want to see upper half sensitivity, just like in the inversion, upper half sensitivity, and then just a random run up to the highs here. Now, what you'll see here, zooming into the details, is this is a market maker buy model, right? Down here, we have the smart money reversal. This drop into the fair value gap, this is the low risk buy. The inversion fair value gap here is the first stage of accumulation. And then we drop down to the fair value gap, and this is the second stage of accumulation to take out the original consolidation. This fair value gap is further key because it has a yearly opening price overlapping it. Drops down into it, perfect, rips higher in a bullish week. And then look at what day we make the low. When you're bullish, Tuesday, 70% of the time rather, will make the low of the week when you have a directional bias, when everything is trending and you know what you're looking for. So we have a nice Monday, Tuesday, low of the week, trading down into the discount array I gave you guys last week, right? Because if you guys remember, we opened here last week. So what was the discount array I gave you? This daily fair value gap. And it made the low of the week right on schedule Tuesday when you expect it in trending models, right? So for those of you guys that may be stock traders, what the hell am I even worried about this for? Well, I hope you didn't try to long stock this week. This is why this is important, right? So we hit the fair value gap here, reprices higher into buy side here. Everything promoting bullish order flow. Gap acting as an inversion, upper half, fair value gap here, upper half, beautiful, beautiful, beautiful into the highs here. And again, part of a market maker buy model. All right, so working into the bias here, going into the rest of the week, we have this high back here. Now, what's going to be important for me going forward is seeing how we trade above this high, right? So do we really start to accelerate through it? That would promote bullishness because this high here is key on the weekly chart. And if we're really going to accelerate deeply into this range here, I would need to see acceleration above this high. So I'll be watching how we trade going into this next week. Based off the monthly candle, there's no reason to expect this candle to be bearish. So I'm expecting a big caffeine bar to the upside, likely to take us into that monthly fair value gap. So that's what I'm looking for, and that transposes down into the weekly, the daily, the hourly, 15, 5, 1, sub 1 minute. So acceleration above this high. Next draw would be this high here. little small high, and then the high back here, and then acceleration above that takes us into this high back here. All right, so looking at the hourly chart here, you can kind of see the weekly profile coming into play here. You see Monday, midnight opening, drops down. Tuesday, low of the week. That's also taking sell side liquidity. If the market's bullish, right, market's going to, smart money will buy at areas where retail will look to sell. Retail's going to sell the breakout. Smart money's going to accumulate those buy stops on Tuesday when they expect the low of the week. And then we're going to see bullish order flow higher into our draws on liquidity. So with that in mind, I'm looking for a continuation of that going into this week. We've already done a consolidation. We've cleared the consolidation here. In my mind, there's no need for the market to do a deep retracement. So I would prefer to see the market giddy up and go and really make a run for that 102 level here. And that would support what I'm looking at top down monthly all the way down to the hourly chart here. Now, further confirming, let me just go ahead and touch on the currency. I know you guys are going to ask me about currency, so I might as well just touch on it while we're here. So obviously, bullish dollar. I always just tell you guys, I usually give you guys the lazy answer. You guys ask me, hey, look at pound, look at euro, just flip my dollar analysis upside down. It's the same thing. Now, if you're going to trade foreign currency, you have to know relative strength analysis, right? So which one would you rather short, euro or pound? Obviously euro, right? Well, which one would you have rather shorted? Now at this point, the pound's the sixth sister, so it'll actually look to catch up, but that's a different concept. I'm not going to explain that here. But in terms of relative strength analysis, euro is already at sell side and at this low here, almost. So it's much weaker than pound. So while I don't give you guys which one to short, I'm already giving you guys the direction. It's just up to you to determine, do you want to work with the euro or the pound? Both would have made money, but one's going to give you more bang for your buck here. So you can see euro accelerating into its sell side here, and then the next low we have is this low here. Overall, very bearish order flow, very weak. Breakaway gap here, very nice, promoting lower prices. We retraced into this inversion, fair value gap here, extend that through, very nice, and then dives into the sell stops there. For the pound, I like how we closed below this wick here, so we'd want to see it stay below that, this longest one here. More specifically, this inversion fair value gap here, you'd want to extend that through. That'll be useful information, and then the sell side down here. So there is the bias for Forex. All right, moving right along, bonds. Finally, we've got something in bonds. So bonds for the longest time have been absolutely useless, at least for me, from a macro standpoint here, because we've just been consolidated, right? But now you see we're starting to see a movement in this monthly candle that we're in. So we'll drop down to the weekly chart here. So initially, earlier in the year, we wanted to see if they could run out the buy side here. They didn't, and then it aggressively broke down. I was watching this fair value gap here, which obviously now turned inversion fair value gap here. 1 second. Weekly chart. All right. So we closed below this fair value gap here, which is indicative of bearishness. We closed below, we traded up into it, acted as an inversion, and that's selling off. So we're seeing heaviness in bonds, right? So weaker bonds is going to make the bias very easy for the currency, right? Now we haven't had this for a long time because, again, like we talked about, the bonds, they haven't really been useful information, at least for me personally. So now that the bonds are starting to move, they're trending, it's directional, it's easy price action, it's easy reading market structure, order flow. That's going to make it very easy for now the currency to move, which is now, as you're going to see, will translate into trading stock indices, right? So moving right along here, bonds, we see inversion fair value gap accelerating. We have sell side here, and then you can see the lows here. And then just note all the sell side that we have within here. And then that'll likely be what we accelerate down into. The primary use of the bond market is to confirm what we're looking at in dollar. So I'm not looking at bonds for every trade I'm taking, right? It's like, okay, there's buy side on the 5-minute chart. I'm going to go long this 15-second gap. Oh, but wait, I need to see what the bonds are doing. Personally, I don't do that. I do monitor the dollar while I'm trading, but I do not look at the bonds. I use bonds at the beginning of the week and maybe in the middle of the week to confirm what the dollar is doing, but I'm not worried about all these markets while I'm trading, right? It just gives me macro perspective, right? So looking at the daily chart here, we'll just look at the 10-year. So we rallied, we took the buy stops here. We broke down through that weekly gap here, which is this one here. We traded up into it, we respected it. Nice Tuesday high of the week, right? Because now you see how all the intermarket analysis comes together. Tuesday, low of the week for dollar, Tuesday, high of the week for bonds. Perfect ebb and flow in the market. Exactly what you want to see when everything's firing on all cylinders. So we get below this weekly gap, we sell off. This inversion fair value gap here, extend that through because it was used as support on the buy side of the curve, but now we're bearish, right? Because we're bullish dollar. So that's going to act as an inversion fair value gap. Open trades up into it, uses it as real resistance, hits that, and now we have equal lows here, and we'll see what they do on the gap opening on Sunday. Acceleration lower in my mind takes us into these lows here for bonds. But obviously, before we get all the way down to these lows, there's several other short-term objectives that you could have. So bonds confirming what we're looking for in the dollar, which finally we made it. Stock indices is going to confirm what we're looking at in these markets as well. So we'll get into all this great stuff here in a moment. Let me take this. There we go. All right, and first things first, let's look at all the markets here. All right, here we go. All right, so if you guys recall, last week we were discussing the S&P at the camera's on the way there. Make sure you guys can see the Dow here. All right. So we're talking about the S&P divergence at the highs here. You can see S&P making a higher high here. Let me put the red cursor on so you guys can see that. Dow making a higher high here. At the same time, NASDAQ was confirming it didn't want to join the party. So what this is confirming to me, and again, just this is recapping everything we talked about last week, is we're seeing heavy distribution at the highs, right? Anybody that understands anything does not want to be long stock right now, right? You would have to be a total fool to say, I want to be in risk and I want to be long the stock market right now. So investors, people with deep pockets, obviously they're also making these considerations as well, right? So nobody wants to be long stock. So what does that mean? You're going to see distribution taking place, right? Warren Buffett, a renowned, famous stock investor, right? Mr. Buy and Hold, is in his largest cash position ever, right? So if Mr. Stock Market is in his biggest cash position ever, distributing, closing out at all-time highs, that probably means something, right? So we're now seeing that graphically in the charts here, showing professional distribution at the highs. Distribution of what? Long positions. So we see a lower high in NASDAQ, higher high in Dow, higher high in S&P. So this is all giving the backdrop, right, as to why we were bearish this week and why we're going to continue to be bearish going into, for what I see, the rest of the month of March going into April. So we saw S&P at the highs. More specifically, getting into the details now, we have a wick here. We see we dig into this wick on the Dow, failed to even reach the lower quadrant. So it's no surprise we're seeing a big down candle. Right? And same thing here for the NASDAQ. You can see it comes up, kisses that midpoint, and then can't get above it, heavy. Next monthly candle opens, makes a little Judah swing, makes the high of the month, heavy. Working down into the weekly chart here, you can see the S&P a bit clear here. Then you can see all this distribution taking place here, right? So why were they holding the market at all-time highs for so long? Maybe because it was to afford people that have been long the stock market, right, which has been in a parabolic bull market for the last, since 2008. So people have made a lot of money in the stock market. So if it's not going to go higher anymore, then they want to rotate out of those positions, right? But think about Warren Buffett. He's not trading 1 minute FBGs. So he has a lot of size to get off. You can't scale out billions of dollars on a 1 minute candle, right? It requires a lot of working in and out of those orders. So thinking about it from a smart money standpoint, if you wanted to distribute your long positions in the stock market, where would you want to do it and how would you do it? You'd want to do it at all-time highs, and you'd want to do it working it out incrementally. And that's what we were seeing here, or what I'm seeing visually in the charts at all-time highs. Heavy, heavy distribution, which if you understand what's going on in the global state of things, it's very easy to understand why that's the case, right? And obviously people with a lot of money, they obviously understand what's going on as well. So it's no mystery. All right, so S&P at the highs, that's supporting why we're seeing heaviness on this weekly chart, right? So if you look at the Dow, heaviness, reaching for sell side. NASDAQ has been a lot more reluctant to drop than S&P and the Dow, but I think it'll look to catch up and be like a sixth sister, meaning it'll be in a hurry to catch up to what the Dow and the S&P has already done. So the S&P, you can see it's much weaker, gave a nice little immediate rebalance there on this candle. So we'll likely see a big down candle next week. So this is all framing my bias, my narrative, and what I want to see going into the coming week. So we have sell side here for S&P. You can see they left these relative equal lows here. That's a retail chum. You know, when you're fishing, you chum the water so the fish come, leave an equal lows there. That's chumming the retail. So they chum the retail here with double bottom, right? See how good that works in the NASDAQ. Nice double bottom, go long, smoked. And then we have sell side here. So relative equal lows here on the weekly chart for S&P. Sell side down here for NASDAQ. And I'll get into my specific targets. I just wanted you guys to see the relationship between the three averages and how it's just easily tipping its hand to traders that know what they're looking for, right? And that's what I'm trying to communicate. And that's what I'm trying to turn you into here on these YouTube streams. So with that in mind now, let's go into the details here. All right, so monthly chart, my draw liquidity is this fair value gap here. So I like this fair value gap for my monthly draw liquidity. I want to see a big heavy monthly candle, and I want to see it rip right into this monthly fair value gap. That's what I'm looking for NASDAQ. I'll share my targets for the other averages as well here real quick. So looking at S&P, you can see I like this monthly fair value gap here as the draw for S&P. And then for the Dow, note this fair value gap here. This range here. So that's what I'm looking at on the monthly chart. Macro perspective, that's what I'm looking for until we get to those levels, right? I'll share what changes that, but for right now, that's my draw, and I don't foresee anything changing that. But obviously, I will share, you know, just in case everything just turns bullish, which I don't expect to happen, but we'll see. Crazier things have happened, right? So the backdrop here is S&P at the high, so we saw professional distribution taking place. We saw a lower high here in NASDAQ. We broke down this wick here. We traded up into that wick. We stayed in the lower half, so that's what bearish weekly candle. Another bearish weekly candle following that, and we've been in this nasty range here. We finally left that range, which again, like we talked about last week, the market's been waiting for what you guys are seeing right now, right? The escalation is kind of, okay, what's going to happen there? You know, is more countries going to get involved? Like really what's going on there, right? And that's what a lot of deep pockets were waiting for, and that's why we were in this consolidation, right? But now that that's kicking off, that inspires new sentiment, right? Fear, greed, traders are bringing their order flow into the markets. Funds are allocating their capital to the markets with the new sentiment that's being inspired. So on the back of that, you're going to see loose ranges. You're going to see the market be able to move, run, and reprice to key levels. And it'll be a lot more fluid than what we've been seeing for really the last, how long? Yeah, really the last 4 to 5 months, really. So going into this week now, we have the backdrop, the context, what we're looking at here. So this last week was our weekly drawn liquidity. So these equal lows, our targets last week were delivered. And again, that's not me saying, look how smart I am. It's me showing you, look at how consistent these markets are. And this is straight out of the pre-course, equal lows. Market's going to trade in that, right? So let me take that off here. So let's zoom in to the details here. So we've already covered the backdrop, what we're looking for. So we have this wick here on the weekly chart. We traded up into it the first week of March. We traded up into it the second week of March. We did what though? Lower half, lower half. If I see this on like a 1 minute chart, next candle I'm going in, I'm selling at the open. So looking at what we're seeing on the weekly chart here, I'm expecting this next weekly candle to just completely erode and evaporate lower and attack sell side here and attack sell side here. And if we don't get down into these levels on the next weekly candle, I want to see it on the very next weekly candle. What changes this analysis is if we get above this weekly wick here on a closing basis, the midpoint. So if we get above the midpoint here on a closing basis, that is no bueno on a daily chart. So a daily chart, we do not want to see this thing get above this weekly wick midpoint. But based off the backdrop we have here, next candle, you're looking for a stretched out candle, reach your sell side. All right, so looking at the daily chart here, man, what a mess we've had, huh? So it's been a scalper's market. Scalper's market, meaning get in, get paid, get what you're looking for, move to the sidelines, right? But now the market's starting to move a little bit, so that will bring with it, obviously, a lot easier trading conditions here. Hey, Stracky, happy Sunday, brother. Why I'm leading the way down? My man. Red, thank you, Dylan, for sharing your knowledge. Yeah, glad to be here with you guys. Appreciate your feedback, sir. All right, so looking at the daily chart here for the NASDAQ, again, been a mess because of what we've been talking about here, right? Nobody wants to assume risk in this climate, right? I mean, a lot of people are in puts, a lot of shorts are being taken on the market. but nobody wants to be long this market right now, right? At least no one with any sense. So if you have sense, right, and you don't want to be long the stock market right now, you're looking for what? Lower prices. But if everyone's betting on the market to go lower, well, they're not going to let it just go lower, right? They're going to hold it. So that's market making for you. Well, now that we're starting to roll over here, what do I mean by roll over? Well, we've been inside this range here, right? This high and this low. We've just been banging around inside that. But then we pierce that range here. Once we pierce the consolidation, price action cleans up tremendously because now it's in expansionary profiles, right? And then you can see dollar, what day did it make the low of the week? On Tuesday, right? And then it ripped higher into the close. What did the indices do? They made their high of the week on Tuesday while dollar is making its low of the week. So look at the relationship here. Dollar here is trading lower into its discount level, which is this daily fair value gap here. At the same time, NASDAQ is reaching higher into its premium array in the form of the rejection block here, just the highest body. It didn't get above the high here, it got above the rejection block. That's a premium array. So time and price aligning, right? Just like when I'm trading the morning session and there's equal highs above and they take sell side first. And I'm on that thing like a cheap suit, riding it long in the buy side. What is that? That's an agreement between time and price, right? Well, what you're seeing here is also an agreement between time and price. It's trading higher Tuesday into a premium level. It's making it expensive. Why would it be expensive? Because smart money, traders that are in the know, they want to sell it expensive above the weekly opening price. So it's going to drive up into a premium, make a high of the week on Tuesday, and then we're seeing trending model going forward. So you see what I was saying earlier in the stream, which is now that the higher time frames, the intermarket analysis is present, they're moving symmetrically. Look at the advantage this gives you. Understanding what dollar's doing. Understanding what the stock market should do on behalf of that, right? And if you're trading stocks, then you have to know what the indices are doing. Because if not, you get crushed. Look at your price action Tuesday through Friday, right? Look at your losing trades. They were probably in the wrong direction. So if you're trading stock, and you don't understand what the indices are doing, you're completely trading blind. All right, so we've left this range here. I'm watching this key wick here. This is gonna be a key level for me because if we're gonna accelerate into the sell side here, I'd like to see us really tear down through this wick here. So note the midpoint, want to see it accelerate through that. I am expecting a gap down, given what we've already seen starting in motion on Friday. That liquidity is there, then especially you can really see it for the ES. And let me just put this on the hourly chart. All right. So you can see, especially on the S&P, look at this. Look at how obvious they left these lows here. So whenever you see that and it's like this, usually they'll just gap it down and then run for that low on Sunday, not giving the traders an opportunity to close that position. Who's traders? Who's long? Who has a sell stop here? Funds. Funds absolutely trade like that, right? They have their sell stop here. It went long. Oh my gosh, we hit it once more. So now it's strong support. Oh my goodness, add to the long position. We're adding to the long position and smoked. So we're looking for sell side. So daily chart here ran higher into the rejection block here. We traded down. So want to see us really erode through this wick here. I would not want to see us trade through that weekly objective here, that weekly wick. We want to see us stay in the lower half of that. Ideally, really not even work into it at all. So daily chart, we're just looking for continued heaviness. In my mind, we should never revisit Friday's high. Friday's high should not be revisited for us to remain bearish. Right, and then working into the hourly chart here. As you can see on Monday, midnight, taking higher into a premium market. They throw down a fake bull flag here, right? So retail's going to buy that. Thinking, oh, it's good. It ran higher. Fake bull flag. Now we're going to see another measured move higher. Not if the market's bearish, right? It's going to trade up, price in a premium early in the week. Smart money's going to see distribution. They're going to distribute here while retail's trying to go long. And then you have an inversion fair value gap here, extended through. Got below it on Friday. I went long on Friday. So I went long a bearish candle. That's because we had obviously equal highs here, and I'm a scalper anyway. I don't need to trade in the direction of the daily range. I can. Obviously, ideally, I would, but the easy opportunity was just to run higher in the buy side for me personally on Friday. So I didn't participate on the drop here, but I was trading long into this inversion fair value gap. So we drove up into the inversion fair value gap. We hit 50% of it. The bodies, though, stayed in lower quadrant, rolled over, bearish breaker block here, extend this through, respecting it, and I just want to really see us melt. I just want to see the NASDAQ die and just really run into that 24,000 level. Why this fair value gap here? Phenomenal question. So this fair value gap here is a big displacement, and it's really one of the first big displacements of the week. On top of that, it's also happening within this key swing high here. So fair value gaps that form within key market structure, very, very important. So you want to extend those through. They're going to be useful. When you see how it's useful for the sell-off here. Then we saw a heavy 10 o'clock candle, heavy 11 o'clock candle in the sell side here. So we have this breaker here. I would prefer to see us stay below that. See this act as like a breakaway gap idea here. Since it already ran higher, took the stops, breaker, rollover. For the S&P, for S&P traders here, same deal here. It needs to be rallied higher. This is a Judas swing. Taking out buy stops, inversion, lower 8. Perfectly, give you high of the day, and then we roll over. So that's the business. So on the hourly chart, guys, I don't want to see us get above the breaker. Ideally, again, we have no business revisiting Friday's high here. It already did the work. It already ran buy stops. It already offered price inside this inversion fair value gap. It has no business getting above this high. This fair value gap here should be a breakaway, and I just really want to see us melt into the levels here, and then the lower levels I have below. All right, guys, so we'll take a look at the other hot markets that we got right now, and then I'll take a couple questions, and then we'll get going here. It's a beautiful day here. Time to get to the beach. Got to get to the weight room. Got a lot of studying to do. Got YouTube content to make for you guys, speaking of, so you guys will get something hot here this week, breaking down my full trading model. I know you guys already have videos on my trading model, but I'll be sharing more detail, more refinement to help you guys out. For those of you guys that are looking for a model, what a strategy that's step-by-step that you can just show up to the charts and follow every single day. And I'll be likely recording that tomorrow after live trading with my mentorship group. So with that being said, you guys can expect that from me sometime this week. So got some heat to make for you guys here as well. All right, so yeah, we covered everything there. I covered what invalidates my bias, what we're looking for. All right, rocking and rolling. Let's keep moving. So oil. Oil. All types of manipulation, huh? All right. So oil, I think we'll obviously make a run for the 130 level here. And I'll be very interested to see how we trade once we get to the 130s. If we accelerate through that, then 150s is easy if we get to the 130s, right? So that's higher time frame. Weekly chart. We have this gap here from the last week, so we'll see kind of how we use that information here from the previous week. Ideally, if we're going to be bullish, we just want to see this thing here, support price, not even really work down into that gap. So see it supported there, really run higher. This also, right, is very contingent. Sorry, it's very contingent upon how we open, right? So you have to note how we open, because obviously we could open very different from where we closed at the 99. So obviously factor in the gap risk here, which is wherever they open the market up. So looking at the daily, we'll have a little bit more refinement here. So you can see we opened higher with an extreme gap on Monday. After opening with that gap higher, it immediately ran higher into targets that we had over here on the left side of the chart. Once those objectives were realized, they absolutely smashed the market down lower. You know, on the news of more supply coming out, countries are relieving their are using their strategic reserves, right? So on the back of that, the market sunk down into a discount, trading into a random fair value gap here. And then once we hit that, we then created a wick. On that wick, we then traded into it on the very next candle. We stayed in the upper half of that wick here. So in my mind, that's promoting bullishness. We then got through the new week opening gap here, which is the gap opening on the Sunday. So we closed above that. So in my mind, we are a green light to trade higher. So what I would do, I would measure this wick. I would break it up here into, well, since it's a big range, you want to break it up into eighths, but just to keep it simple here, you can just have it on the quadrants. Just keep it simple. I mean, if you want more levels, then you can use the 8s, and that's good information. But just keep it simple. Use the quadrants. Lower quadrant, 50%. Want to see how we use the lower half, right? Do we close above that? That would be super good for bullishness. That'd be exactly what you'd want to see. So we just really want to see it, basically like on NASDAQ, right? Want to see it just eat through that wick, tear through it on the downside. You'd want to see this thing really just rip through this level like it's not even there. And then if we lay a body over lower quadrant, that would promote getting up to 50%. Get them to 50%, that would promote trading to the high here. So that's the business on oil. Yeah, so this low here already took sell stops. We're above this new week opening gap here. Yeah, so in my mind, we have no business coming back down below this level here. So I'd like to see where we gap open here. But in my mind, we have no business getting back below this new week opening gap. It's already done all this work in it. It's already took sell stops here. So we should be off to the races for crude oil. What's gas prices where you guys are at? From what I'm hearing, we're seeing 360 national average in the U.S. I'm not in the U.S. personally right now. U.S. Born and raised, obviously, my whole life, but not there now. From what I'm hearing, though. Straw's a little messed up here. All right, so we'll likely see oil prices going up. So that's why you want to learn how to trade. Energy prices, cost of living, heating your home, obviously all that stuff's going up. So never been a better time to learn how to do this for real and learn how to make some income, because you're definitely going to need it, especially going into what we're seeing now. So be mindful on crude oil, be mindful of that energy bill, which you'll be receiving, and will likely reflect the things that we're talking about here. This is how markets kind of comes into real life, right? Paying more at the pump, paying more for energy, which is why it's important. Learn skills, right? Especially a skill like trading, which can give you more income, right? Maybe not make you rich in your first couple of years, but it can give you income. And then from there, you can build wealth. You can get rich with the skill set. All right, so crude oil, gold. Yeah, let's talk about gold and silver. So gold and silver looking weak for the moment. So like I said, longer term, like long-term zooming out, looking at a monthly chart, like not zooming into this market, I am bullish on gold and silver, right? So now, again, that does not mean they're going to go straight up, right? It doesn't mean it's just going to just keep going parabolic like this, but zooming out longer term, I am bullish on metals as an investor, not as a day trader, not as a swing trader, not even as a position trader for a few months. Like I'm talking long term, this is the place to consider looking at putting some of your investments, your savings, your wealth, whatever you may have, right? Not financial advice, something to consider, right? Something to educate yourself on. Now, zooming out, I'm very bullish on this market. In the short term, a whole lot of things can happen. A lot of people have a vested interest in wanting to see the metals market go higher, right? And if you know anything about the markets, well, they're into stiffing people. So looking at what we have here with gold, traded higher, we had a failure swing here, right? So we did not make a higher high here. Then we broke down, created a gap, hit the gap, respected the lower half of the gap, and now we're rolling over. So if we accelerate to these lows here, we could make a dip back down into the 4,000s. And then obviously how we trade there would determine whether or not we can get into 4,700s. And then that would take us down into this wick here. And then we would have to consider whether or not they want to make a run for the sell side here at the 4,400s. Silver is not bullish at the moment with what we're seeing personally. We're with what we're seeing currently. So personally, I don't have any trades or investments in the market currently. I do want it to go higher. So like as a long-term holder, absolutely. Short-term, this thing is likely going to go lower, which if you are a long-term investor, that obviously probably creates a buying opportunity, right? Of course, not financial advice, just how I would consider this. In metals and things I want to own long-term, I want to buy the blood, buy the fear. When people are panicking, it's selling off, it drops from 120 down to 60. Oh my gosh, right? Panicking, selling their bags. This is when you want to be buying, right? Buy when others are fearful, especially if it's something that you want to own longer term. And if you understand that the dollar is losing value precipitously, then it's just a matter of time until it loses all its value, and you want to own things that obviously have tangible, real value. So enough of that. Buy side or sell side imbalance, buy side efficiency. We traded up into it. We left the upper half open. That's bearish. We broke down, created up close candle here. It's a bearish order block. We drilled it here, swing high inside a bearish order block, and now we're rotating lower. So we have sell side here, relatively below. See if we accelerate through that. If we do, that'll take us down into this bullish order block here, and then we could see if we want to probe below the bodies here, and that would take us down into $70 an ounce. And from there, you have to measure this wick and then gauge the willingness for the market to want to trade through that level. And another reason, right? So I didn't cover metals, but if you're trading metals, you absolutely have to know what the dollar is doing, right? So if you don't know what the dollar is doing as a metals trader, you're also very much trading blind and missing the boat. Look at the dollar. Dollar's higher. Higher dollar, you're going to see risk assets sell off. Now, am I making the case that the dollar that gold and silver is a risk asset? No, I'm not saying that. But traditionally in financial markets, if the dollar goes higher, assets are being sold to have the dollar. So you're going to see a sell-off in indices. You're going to see a sell-off in foreign currency. You're going to see a sell-off in gold and silver as the dollar goes higher. Commodities go down generally as the dollar goes higher. Now, the reason we're seeing crude oil and dollar go up at the same time is because obviously we have something unprecedented going on, which is World War III and the disruption to the energy in a certain region of the world. So that's going to send oil higher with dollar, but generally strong dollars, usually weak for commodities outside of specific like wartime events. So with that being said, guys, that's it for me here. I don't believe I'm missing any other markets here. So covered a lot of important things here. Oh, cryptocurrency. Some of you guys don't want to hear my analysis on crypto, but guys, you know, me saying it's going lower isn't going to make it go lower. I'm just telling you what it's going to do. All right. So my crypto guys, don't get upset. Weekly fair value gap, hit that, sold off, right? Now we're trading inside this weekly fair value gap here. So far, we're not able to get above it. So that's heavy. And if we're going to see a continued higher dollar, right, risk on, risk off, that's going to send cryptocurrency lower. So basically, in summary, you don't want to be long assets, risk assets, when the dollar's going higher. You want to be short. You want to be looking for lower prices so you can be in sync with institutional order flow. All right, guys, take a few questions here. Maddie, the weekly profile nugget of gold, good one. Awesome, brother. Glad you like it. Glad it's helpful. It's definitely good when you have more pieces of the puzzle. You see how it all kind of comes together and just makes beautiful tapestry. It really puts the probabilities in your favor too when you can frame all that information. Like, okay, we likely have a Tuesday high of the week. Great. So now what does that mean for the daily bias? That means it's bearish. Great. Now what does that mean? You know, when I'm going into 930, okay, we're probably looking for some measure of manipulation, drop lower. So it just really unlocks all the understanding when you have more layers of knowledge as to what the market's actually doing. Absolutely. Glad it's helpful. Albert, my man, appreciate you, brother. Red, I would like to open a long-term position on SCHD this year. Can you take a quick look at it? I'd like to buy around 29.60. Do you think it might get there? Yeah, I'll take a look at it. SCHD. Okay. What is this? I see it the stock. It's on the New York Stock Exchange, but like, what is this? Oh, dividend equity. Oh, okay. Oh, okay. So it gives the dividend yield 3%. Okay. All right. So if this is a stock, right? If it's an equity, obviously, you know, you're going to have your own prerogative. It's your own investment. But I personally, what I tell those I work with, I'll say this. If you're trading stocks, right? Any stock, JP Morgan, Goldman Sachs. I know we talked about that last week. I told you guys the financial sector was going to sell off. Look at this. XLF, money, bam. So for my stock traders, easy money when you know how to read the candlesticks, read the charts. Stocks selling off. So what I recommend to do as a stock trader, regardless of the stock you're trading, and we'll go back to the stock that you mentioned, SCHD. But I'm just showing you an example. You see all these other stocks selling off, right? The ones I just showed you, right? Apple, JP Morgan, Microsoft, all stocks are selling off basically. Well, why is that, right? Why are we seeing sell-offs in, Microsoft and Apple? Well, because we're seeing the stock indices sell off. So again, I'm not going to tell you what to do with your setup here, my man. But what I will say is you don't want to try to swim up the tide, right? Have you ever seen a river, right? Like a whitewater river with whitewater rafting where it's just water rushing? Well, imagine trying to swim up something like Right? Just imagine that for a second, trying to swim up a whitewater rafting river. That's essentially what you're doing when you're trading against the underlying direction of the stock market itself. So if you want to make trading extremely hard, then trade against the underlying energy. Go long stock while the indices are cratering. And you'll be frustrated, you'll sit and trade that chop, and it'll just be dog shit trading. You want to understand institutional order flow. Institutional order flow is going to favor the side of the market that it's going to run towards. So institutional sponsorship, deep pockets, aren't going to come in here and sponsor the long side of a market, the long side of a stock, when the overall stocks are cratering. They're going to sponsor the short end of it. So they're going to sell short those markets, and you're going to see aggressive movement downward. So it just goes back to, again, that river analogy, which is, do you want to swim upstream, or do you want to just easy swimming with the stream, then just let the stream carry you into wild profitability? I would go with the side of just letting the stream carry you to profitability. Because if you really look at your trades as a stock trader, and I'm just speaking to my stock traders here, your worst trades are all against the indices. Your best trades all have the indices confirming it. So that's what I would say as it relates to this market here. Generally, fair value gaps are buying opportunities, right? So you may be thinking, oh, fair value gap, oh, there's that breaker block. I just learned about that. So maybe this is a good buy here at the $29.60 level. I personally am not seeing that, brother. But again, if this is an equity stock and you're holding it for the, it's not equity stock, you're holding it for the dividends, and you have a different plan, obviously that's up to you. But in terms of bang for your buck in trades and in investments, I would look for directions with the stock, with the indices. Like, I'd be looking for a reason to short sell side, personally. Great question, sir. Gas going up in most countries? Yeah, definitely. What's the price increase in your land? I haven't filled up at the tank. I just noticed usually when I pay like 60 to fill up my tank, it's now like 75. So I've never paid attention to the price of gas. I just show up and fill up my tank, knowing the price isn't gonna change anything anyway. So it's something I don't even waste my time with. It's like, okay, I know the price of gas. What am I gonna do? Not fill up my tank? So I've never paid attention to the cost. It's just is what it is, and you fill it up. But I do notice what I pay, and it's up to like 75, 80 bucks a tank now from what was 60 before. So shit's getting expensive. Got to lock in, make some more money. Lyndon, thank you, bro. Educational, much appreciated. Top stuff. Thanks, sir. Joe, thanks, Dylan, for another great weekly market outlook. Buy models for crude oil, gas. Yeah, absolutely, sir. No doubt. Like we talked about in the mentorship chat, if you're going to trade oil, you want to make sure you're getting in stocks that are going to give you that direct exposure to oil, and it'll just make it really easy for you to make bank on these price runs. Good luck to you, brother. Good luck to you this week, brother. Good luck. Good trading. Day's monthly CL chart looks drastically different when back adjustment is on versus off. Is it better to use one over the other? Yeah. So you want to keep back adjustment. You want off. Let me go up to a daily chart. Yeah. Back adjustment off. You don't want this talk. This will give you fake news, fake numbers, because it'll adjust the contract prices on previous ones to adjust for the roll gap. So what this will do is it'll remove the roll gap. So when we roll over from one contract to the next contract expiration, many times there's a gap, there's a disparity in that price. All right, so the continuous contract, if you have back adjustment off, will show that difference in the gap. If you have it toggled on, then you'll see that. Let me see, just an example. Roll gap. Yeah, well, I can't find one. None's jumping off the chart to me. But the only difference is that just one has the roll gap, one doesn't. If you have it toggled on and it removes the roll gap, it'll show you skewed numbers from previous contracts. It's not like actual data, is what I was saying. So I always just go at back adjustment off. Great question. It's an ETF. Yeah, it's an ETF. Yeah, I got you. Sorry for being late. I have a question about Friday's gold price. I analyzed it. I should have waited. I analyzed it. It should have went up. Instead, it was heavily bearish. Could I please review? Yeah, why not? Gold daily bias. Why were we bearish on Friday? Because we were coming off a bearish order block. right? So here's something you want to look at. For daily bias, this is 1, 2, 3 easy daily bias. When you have a swing high in price action, candle number 4 is a sell, guaranteed. What do I mean by that? Let me show you. So we have a fair value gap here, and the market traded up. And I'm assuming, taking a great deal of liberty here, I'm assuming you are on the lower time frame, and you had no idea what the higher time frame was indicating, and you got cooked on the lower time frame. So what you want to do is focus on the higher time frame, and then and I'm going to give you some things to focus on the higher time frame. But then you want to look for your lower time frame setups within the context of the higher time frame. Right? So here, the market traded high. I mean, there's really not a whole lot of bullishness to go off of here. I mean, this gap here filled all the way. Very different compared to like something we haven't done, right? Something that's clearly bullish, obvious bullish order flow, giddy up and go. Every PD array hits it, bang, right up to premium targets. We're not seeing that here, right? And what we did see is the market traded higher. Tuesday, making a high of the week, right? All markets. It's amazing, I know. Tuesday, high of the week, inside of a daily fair value gap. But then you are studying, well, what would we do inside the gap? Well, let's put the midpoint on there. That's the first measurement you have to concern yourself with. And all we did was hit the midpoint, and then we retreated off of that and closed below it. Okay. What does Wednesday do? Open, trade higher, failed to even reach the midpoint, and then we close lower. Immediately, the next candle is a short. And the next candle after that is a short, until it reaches the draw on liquidity, which is relatively equal lows here. So gold, clear short on Friday here. And that's further solidified, right? I know you showed up late today. Make sure you're on time next week, all right? Because you got to be on time next week so you can understand what these other markets are going to do. Dollar trading higher, right, is going to be bearish for gold. And then when you have these indications here, a swing high inside of the daily fair value gap, candle number 4 is an easy short. And if we haven't got to the draw yet, candle number 5 is going to dump too. And what I mean, candle number 4 and 5. Well, swing high is three candles, right? Candle 1, candle 2, which is higher than candle number 1 and candle number 3. So that's a swing high. When you have a swing high in a premium array, look for shorts after that. So something you can study and reflect on. Good question. Yeah, you were looking at the higher time frame. Yeah, that's fine. Just make sure you consider those aspects of institutional order flow, how it uses the gaps, swing highs, swing lows, top-down analysis. Then once you understand the direction, you look for power of 3. So you're going to look for power of 3 to the downside. So that run higher that you saw in gold was manipulation to go lower, which can be seen and understood because we have higher dollar. So good learning experience for you. That's how I learned it as well. Don't feel bad, brother. We make mistakes, we get experience, and that's how we learn. That's how I learned. That's how we figure this out. Here's the difference, though. Most traders make mistakes. Something like that happens, and they sweep it under the rug. They don't even journal. And they have no idea why they're making the same mistakes week after week after week after week. So journal that, learn from it, crush it next time, brother. Alrighty. Joe, that's a long-term investment, buy and hold. Yeah. And if it's paying a dividend and you want to own it long-term, then that's absolutely your prerogative, right? So, it's definitely up to what you want to do. There's a lot of different perspectives on the market, right? There's a short-term perspective for traders. There's a swing trading, there's a position trading, and then there's long-term investment perspectives, right? So there's a lot of different ways to attack it. I'm just sharing my current opinion on the market. Obviously, it's your prerogative what you do with the investment. Red, thank you. Yes, sir. Pleasure, brother. Thanks, Joe. Yes, sir. Banking with some awesome trades. Absolutely, my man. Absolutely. And especially with what we've done to supercharge your stock trading, man, I'm excited to see what you do with it, bro. I appreciate it. I was looking at the lower time frames. Yeah, and I've been doing this for a while, and I work with a lot of traders, so I usually know the mistakes that someone's making, before or once they share their executions and what it was that they did. So just make sure, again, you're concerned in those higher time frames, because the lower time frame narrative is going to be derived from the higher time frame. So you're going to make sure you're understanding what's the higher time frame likely to do. Then you formulate the narrative on the lower time frame, right? That's why we're here on Sunday. Because we're framing our bias for the coming week, for what we're looking for. So now this is on the back of my mind when I'm watching price action overnight at 9:30 going into the open, right? All right, guys. With that being said, appreciate you joining me here today. I believe that is it here for the questions. Yeah. So got some good ones here today. Appreciate you guys joining. hit the like button on the way out. I will see you guys on the next one. Have an amazing weekend. Good luck and good trading. Bye, everybody. Stay safe.